Hello and welcome. Welcome to another episode of the 5 Year Career, where today we're going to jump right into how to get double-digit returns in real estate in today's market. What if your new construction investment could pay you 10% per year before appreciation and all the tax benefits that go along with it? Imagine if you could earn these returns without ever lifting a finger, a hammer, or a paintbrush. Why chase 6% in the stock market maybes when you can earn 10% from a hard asset, a real asset, real estate? So, welcome everybody to episode number 65 of the 5 Year Career Podcast. Today's topic is how to build wealth and exceptional cash value or cash flow uh, in real estate. And so, think about this and imagine, if you can, starting a real estate business that creates quality, consistent, exclusive leads and allows you to create a business that in 5 short years will pay you abundantly for the rest of your life. And I know that sounds like a big statement and it sounds like hype, but it's true. This is what the 5 Year Career Podcast is all about. It is a virtual seminar in every episode. I want to invite you, if you're not already watching this right here on our YouTube channel, that go to youtube.com/@ 5 Year Career. No spaces, no hyphens. At 5 Year Career. After all, isn't that what we all want? Today, we're going to cover this and more, along with my friends, my partners, my colleagues, and two very experienced real estate professionals as well. First of all, on the left or the right, depending on which side you're sitting, Mr. Patrick Butler, Mr. Go Vertical. You know, he's a guy who's focused and created great systems, casting a broader net by working with employers, getting real leverage with membership groups. And he's a wealth of information, and he's trained thousands of agents during his career and is a principal with One Point Solutions. On the other side is Mr. Skip Wiley, a serial entrepreneur, founder of $2 billion companies, Transcontinental Lending and an ERA Realty franchise. And today he dedicates his life giving back to other agents, helping them to create good, positive, cash flowing 5 year career agents across the country.
Amen.
Allow me to introduce myself. My name is Eric Wilner. I'm the automatic landlord. And this is why today we're going to play in my sandbox. I absolutely love talking about real estate investing. I'm also the author of a book by the same name, The Automatic Landlord, and of course, I'm also the host of America's longest running daily radio show about real estate. And what I specialize in is in helping and coaching investors to get cash flowing real estate. So here's what we want to do. We got a quick little agenda that we want to roll through, tons of information, and at the end we have a little giveaway to give you. So today we're focusing on showcasing how a specific new construction investment can realistically deliver 10% returns. So that's why we're talking about how one new construction deal can earn over 10% ROI. So let's break it down. Skip and Patrick, feel free to jump in whenever you like. But I have this acronym that I've been telling investors. It's an easy way to remember why I think real estate beats every other investment hands down. And I call it my 5 star, my 5 point evaluation. Compare your favorite investment if it's not real estate. Does your investment provide monthly cash flow? And we're talking about the income that you need to pay the bills, to put food on the table, and so forth. So, does it provide current income? Number two, does it provide tax advantaged income? Does it provide a myriad of different tax advantages? Think about this. Real estate has more tax advantages and incentives, period, than any other investment vehicle out there. And when you think about depreciation, one of my favorite ones, which is an expense that I get to write off, but I don't actually have to take money out of my account to get. You see what a winning combination. So number two, that D is depreciation, I is the income, E is equity buildup. And equity, we could have a whole podcast just on the topic of equity, because in real estate, also uniquely, I can negotiate equity before I even get the investment. So I can come into my investment ahead of the game. And what we're talking about today has exactly that. Number two, I can influence the equity. Can you influence the equity of your stocks, your bonds, your crypto? I can increase the size of my property. I can upgrade and update my property. I can increase the cash flow of my property. All of those things create more equity. Now, real estate also has appreciation, meaning that there's a market, supply and demand, and real estate has a limited supply and an unlimited demand. It just fluctuates with the economy and things like that. But there's no end to the growth of the human population that demands a place to live, but there's only so much Mother Earth there. And then finally, the L in ideal is leverage. And I call it the turbo on there, because the ability to control a large investment, we're going to talk about that today, with a relatively small down payment, or if for an investor, or a really small down payment if you're an owner occupant, you can control a very large asset with relatively little money. And then as a bonus, there is the hedge against inflation. I said in the beginning that real estate is a hard asset, means you can touch it, you can see it, feel it. And hard assets like real estate, gold, and other uh, resources that are physical, they are an excellent hedge against inflation. So, compared to other investments, real estate is one of the best ways to invest. And with that picture, I want to maybe throw the ball over to you, Skip. Let's talk a little bit about this investment, and let's take a snapshot of what's going on.
Gentlemen,
Go ahead,
before
Pat.
before Skip does that, can I just toss in one little item? I think it's
Absolutely.
important that what we're framing today's video podcast at for real estate agents out that are watching this is, and using Eric's acronym IDEAL, which is a very handy way to speak at the bar, at the tennis court, or whatever with potential investors. But this is teeing up what we're going to be doing in a couple of weeks, which is a live webinar for investors in our Done For You program, which you guys can all participate in as well, to bring actual investors to real properties that we're going to be talking about next, and make commissions immediately. So I think this is an exciting topic. Take notes, and Skip, back to you. Sorry for that interruption.
Hey, no. I think that there's a ton of investors out there with lots and lots of cash that are sitting on it because they just can't find a piece of real estate, especially if you're in South Florida, where we all lived for many years, that produces a reasonable return. And so today, I pretend I'm not a real estate agent today. I work for the Chamber of Commerce for the county that I'm going to talk about today, which I think represents one of the best places for a real estate investor. Let's talk about the kind of investors. A novice investor, somebody who has done well with his single family home that he owns, and now, or somebody who's a sophisticated investor that wants to buy multiple properties. So I'm going to talk to you about Santa Rosa County. I live in Pensacola. Pensacola is made up of essentially 530,000 people, but there are differences between Escambia County and Santa Rosa County, and they're quite different, both in population and the communities in general. But why Santa Rosa County? Well, first and foremost, we're 20 miles from the water. And anytime in Florida, if you're buying investment real estate, a major consideration is property taxes. And secondarily, a huge factor today is insurance. The closer to the water, the more dramatic the insurance payments are, and it's going to have a significant impact. Well, let's talk about Santa Rosa County and a city called Milton. Milton is the county seat of Santa Rosa County. So it's a very stable government. It's near several military bases. It's an area where the average median price is $320,000. The population today is 11,411. What's going to happen to the population in this area? Because of the military expansion, because of a large regional hospital, it's expected that you're going to have a 2 to 3% increase in population from that 11,000 over the next decade. What's also equally important is that it's projected that the job market is going to improve 43%. That's 4% a year over the next decade. Unemployment, a significant factor for an investor, is 4%. The national average is 6%. Another significant factor for the population in that community is that the average income is $62,000 a year, which is higher than the Florida average. Just a couple more key ingredients. Here's why Milton, which is the community where we're going to talk about today, is the pros for real estate investment. Lower rents, so it's good for affordability. One of the key things that's happening in South Florida, where I live most of my life, is people can no longer afford to live in South Florida. Rents have gone up dramatically. Property values have gone up dramatically. So a lot of people are moving out of areas that are more expensive to areas that are more affordable. You have lower rents. You have strong growth and a rising home prices in our local market. You have a solid job proximity, and we are the county seat. The city of Milton is the county seat. All of these are key factors, but let's talk clearly about one more factor. The average rent in this market area is $1,950 to $2,100 for a 4-bedroom bath house. And the development that we're going to talk about today is a unique development. It's right in the heart of Milton, and it is a development where houses are 3-bedroom, 2-bath to a 4-bedroom, 3-bath. And the price range of this development ranges from a low of about $250,000 to a high of $290,000. And that's rents, very important factor. Rents have been going up in this area about $60 a year for the past 2 or 3 years. So the development specifically is in East Milton, very near a military base, very near a regional hospital. And so the location of Milton, based on low taxes, based on low insurance, and increasing rents. And by the way, one other factor, and Eric, you can comment on this if you will, the vacancy rate is 5.9%. Anything below 7% is typically a very good number for real estate investors. Do you have a comment about that?
No, that's absolutely true. And a vacancy rate of 5% is sort of like a target professionally. Even major landlords strive to get to that number. So that's very healthy.
Yeah, 5.9 is the exact amount. So Patrick, this great development sits, and when I say great development, there are 10 different builders who are building in Milton because of low land costs, because of low property taxes, because of low insurance rates. And they realize right now, because of higher interest rates, they have some serious issues with moving this inventory. That's why new construction is very significant for real estate investors now because of those factors. So over to you.
Yep. So we're going to take a look at some of the numbers that Skip was talking about. And to piggyback on that, I happen to be living for 90 days as a vagabond, as a bon vivant, as a traveling real estate professional in the beautiful city of St. Augustine Beach, Florida, which is in the county of St. Johns County. And some of these developers that Skip is talking about also have new construction product on this side of the state as well. And guess what? The numbers that we're going to be sharing with you in a few seconds also exist with some of these. So what kind of became an aha moment for me, again, like Skip said, I've lived almost my entire life in Southeast Florida. So my real estate knowledge, aside from what I do nationwide, so I've got the blessing of dealing with properties all over the country and have for about 16 years now. But my local real estate knowledge was always based upon the local marketplace. And so rental properties didn't make a lot of sense for me. But we're going to share some numbers with you right now about this exact property that Skip is talking about. And gentlemen, can you see my Excel spreadsheet up here?
Yes.
Yes, we can.
Okay. So this is in Pensacola, Florida, as Skip mentioned, and brand new construction. So think about this. These homes are already built. And by the way, that's even an angle of attack for investors. If you want to wait a little bit, but capture today's prices, buying new construction before it's built allows you to tap into today's prices if we're envisioning prices going up with that development. So either way, but right now the opportunity is these developers, these builders have inventory. And because of the inventory, they're offering incredible incentives. So let's take a look at these. Now, you'll notice that there are 6 scenarios here. The purchase price is the same on each one, $264,900. And Skip, correct me if I'm wrong, I believe that's a 3-bedroom, 2-bath house, 2-car garage. Is that correct?
It's a 4-bedroom, 2-bath house.
Then thank you for correcting me because I was wrong. The 4-bedroom, 2-bath house. Now, these can be purchased from the developer as an investor with 20 or 25% down. With 20% down, the developer's lender is giving you a 5.65% interest rate. Phenomenal in today's marketplace, particularly for an investor loan. With 25% down, that rate comes down to 5.25%. So your down payment is somewhere in the ballpark between $50,000 and $70,000. Now, again, this is not for the first-time home buyer, this particular podcast, although these properties are great opportunities for them as well. So if you're working the Fearless First-Time Home Buyer webinar program, great product. If you're working with investors or want to tee them up, great product. And we'll come back to years 1, 2, and 3. The rental income, this is annualized, is between $23,400 and $24,000 a year. And as Skip pointed out, that's right around $2,000 a month. Super affordable for most people, small families, people that may want to themselves become first-time home buyers, which is a great way to start building that group as well as an investor. Your operating expenses come in at about $4,250. And that we're talking about taxes and insurance. So, it's amazing numbers when you think about the expenses on these things. And then your debt service or your mortgage payments, roughly $14,000, or if you put down 25%, $13,000 and change. So you're getting positive cash flow on these properties. And if you look at the cash flow compared to the amount of money that you invested, you've got a great rate of return. Now, I know a lot of you are probably thinking, but whoa, aren't there closing costs involved? And the answer is there are always closing costs involved. Permits, impact fees. But guess what, folks? The builder is paying these for you. That is a significant number. It could be upwards of 6% of the purchase price. So that's more money in your pocket or money that's not coming out of your pocket. So rates of return already we're looking at double digits. And as we talked about with a low vacancy rate, these are great numbers. Now, Skip, you discovered something very interesting in this particular community by your location, and we'll talk about it. But if you want to piggyback on this, feel free. But Skip, and this is a very short-term offer, by the way. So this podcast and when we do the webinar in a couple of weeks is going to be based on a very tight window of opportunity for the real estate professionals out there, our audience, those of you watching this particular video podcast. In addition to earning 3% sales commissions, the builder is paying bonuses, and these come off and on the table periodically, depending on how the ebb and flow of their inventory goes. But at the moment, they're paying a $5,000 bonus for the first sale that you make, a $10,000 bonus for the second sale that you make, and $12,000 for the third sale. Now, Skip, I know you're a wheeler and a dealer, And you've come up with a great model to supplement the investor's income to get them to act now. And I'll let you share that little piece of the puzzle.
Yeah, first and foremost, let me talk to you about this particular spreadsheet. 30 days ago, I sold the identical property that we're talking about, appraised FHA for $284,000. So the builder is obviously overbuilt, and the builder wants to liquidate that overbuilt property situation. So they reduce that same property that I sold for 284 down to the sales price that we're talking about today. Same house, nothing different. Existing inventory that they want to move by July 31st. You talk about a timeline. So with a $5,000 bonus and a 3% commission as a real estate agent, it makes good economic sense for me to sweeten the pie for the real estate investor. If I take that 5,000, I can take 2,400 of it, and I can use $1,200 a year, give it to the investor as a rebate. And when the investor gets that rebate, it makes the ROI, the return on cash, even sweeter. And so that is a strategy that you can use in many markets. Yesterday, I was speaking to somebody who lives in Punta Gorda, where they're paying 5% commissions in Punta Gorda instead of 3% commissions because the market has deteriorated there because they've overbuilt in that local market. Too many existing houses causing the developer pain. This is temporary, very temporary, but we need to take advantage of it as an investor. And by the way, Patrick, you mentioned this. On this same property, the interest rate as of yesterday was 3.99 for an owner-occupied tenant. You cannot find that anywhere in this planet unless the developer is giving away $30,000 to subsidize the sale of both investment and owner-occupied properties. Back to you.
Yeah, and we're going to turn this back over to Eric in a moment. But Skip, I mean, what an incredible opportunity. So in real estate, I mean, folks, let's face it, we've been in this business a long time, taking people around, showing them homes, doing this, doing that for an investor, trying to find that needle in the haystack that meets their needs for return on investment. Well, this is a no-brainer. There's multiple properties, not thousands of them, mind you. There are tens of them. There are, a couple dozen properties ready to go right now. So if you're in the know, but maybe you're living where our good friend Andrew lives, down in Pembroke Pines, Florida, which is in the Fort Lauderdale area, and you don't want to drive 9 hours to Pensacola. Well, we've got an entire team that can help you, number one. But number two, if you are licensed in the state of Florida, you can register your buyer with a builder and still earn that commission. It's not an MLS type sale, but sometimes the builder will require you to physically introduce your buyer to the sales center. That's where having a team of folks that are in the backyard of these opportunities, like Mr. Wiley in Pensacola, and for the next 80 days now, Mr. Butler in the great city of St. Augustine, the oldest city in the United States, by the way, settled in the 1500s. So good opportunities, immediate opportunities as well. Eric, back to you in the studio.
Yeah, and just to piggyback on something that you said earlier, which is, this niche in new construction, not only is it a very profitable one, but it's also a very popular one. Just to give you an example, yesterday I was attending a meeting of investors, and we were talking about, what's going on, and I was sharing this opportunity, and someone said, listen, I have a group of investors that only like to buy new construction because there's no maintenance, there's warranties, there's all sorts of advantages to owning new construction. So there's an entire segment of the investor world that loves deals like this. So like when we talk about our webinars, right, where we speak to many investors at once, it's a one-to-many presentation that we make. You're going to uncover a whole new world of investment opportunities. In fact, I'll tell you that back in the early 2000s, there was a lot of, the real estate market was, like it is today. There's actually, in spite of the fact that Skip says that the builders overbuilt, there still is a pent-up demand to buy real estate right now. Unfortunately, a lot of people psychologically are waiting for interest rates to come down. Well, here's the opportunity. A lot of people are on the sidelines, still confused by the elections and the tariffs and all this other stuff. This is the golden opportunity. So, as a real estate professional, the more knowledge that you have here and that you can explain and alleviate a lot of these questions, it's almost like writing your own check. Okay.
And can I
So,
throw one other thing in here as well, Eric?
yeah.
You know, one of our live audience members lives in San Antonio, Texas. So he might be saying, well, I'm not licensed in the state of Florida. This really doesn't do me any good. I may have investors from Texas that could theoretically buy in Florida, but I do want to throw this out there. The same model in our Done For You program can work anywhere in the country that there's equally good investment opportunities. Builders all over the country in your state that you're licensed in have the same challenges. So we can build that model quickly around that, number one. Number two, in another piece of the business that I'm involved with, I sell real estate all over the country and I earn 2% on every one of those transactions. And I don't see the house and I don't meet the people. So there's a definite way to do that. And we call that our 2-2-2 model. So again, if you're interested in more information on how to skin these particular commission challenges, just give us a call, reach out to us. We can explain it to you very clearly. Back to you, Eric. Sorry about that.
Yeah, so you see there's lots of different models and lots of different opportunities. And, just to go back to that story back in the early 2003, for example, there was a lot of pre-construction. We were way under supplied in that marketplace. And what was very interesting that we found very interesting, and this is a secret that we have to keep just amongst us here. The majority of the real estate agents out there didn't want to sell pre-construction because they had to wait to get all of their commission. Now, if you've got a steady flow, like what our seminar system does, it doesn't matter. Some of the things I'll sell will be immediate closings, and otherwise I'm building this long pipeline of closings. And so there was less competition in this area, number one. So we were having a field day, right? And then just think about this, that we sold a bunch of properties in 2003 that weren't going to be ready until 2005 and 6. Well, guess what? In 2005 and 6, without all the effort, all of a sudden I'm scheduling closing after closing after closing after closing when the developer finally delivers the pre-construction. So stay open to the idea of pre-construction. And I'll say one more thing that was wonderful about pre-construction. Number one is that obviously you buy at then market prices. And so zero landlord headaches, zero management, zero tenants. You have appreciating real estate just held by your down payment. And so what we found is that about 1/3 of the investors when the developer delivered, 1/3 of the investors said, go ahead and sell me out now. I like the profit. I want to move to the next project. 1/3 sold after about a year. They got their initial kick up, they got some cash flow, and then they said, let's go to the next new development because I like staying in new. And then another third just were our tenants, our landlords that we managed for, that went on for years and years. So there's a whole bunch of spin-off benefits to this that we won't get into today. So let me focus a little bit on this property, right? And like Patrick said, there's one very similar there. There's another similar one in other places and probably all over the country. But I'll tell you this, that everybody from the northern part of the United States would love to have something in the Sun Belt, whether it be Arizona, Texas, Florida, etc. Here's the bottom line, and it's the income is the outcome that matters. So the bottom line is, Skip said that the median rent there somewhere around $2,000. Easy to find, easy to get people that can and want to pay $2,000 a month. And that's why this is such a sweetheart project, because for the purchase price of around $265,000, put 20% down, that's approximately $53,000. You have a loan of about $212,000. And even using an interest rate of 6%, which is above all the rates that we so far were quoted, this property, the PITI, is only about $1,270. When you add in the other escrows, right, taxes and insurance, which you have to put into your numbers, you have a payment of about $1,620. Rounded off, it's almost a $400 a month positive cash flow. Okay. Nobody ever went broke on positive cash flow.
True.
I've heard of people say that they had a profitable because their cash flow didn't align with their expenses. They made money accordingly. That, what was the saying? I lost money on each sale, but I made it up on volume, which, by the way, never happens. This is $400 a month positive cash flow times 12 is almost $5,000 a year in positive cash flow. New construction, under warranty. So repairs and maintenance issues are virtually non-existent. Tenant complaints, virtually non-existent for the first couple of years. Now, you're getting already an 8.5% return just there on that cash flow. Skip talked about an incentive that we offer to our investors to jump that over the double-digit 10% return. Now, and one of the things that we did back in that previous example that I talked about is that we offered management included for the first year because we knew the phone wasn't going to ring, right? We knew that our job as real estate professionals is to put tenants in the property. And P.S., when should you start putting tenants in a pre-construction or new construction property? Before you close, right? We can show them the models and we can get them lined up and pre-screened during the 30-day closing period. So just keep that in mind operationally. But we talked about net operating income. We talked about annual cash flow. Now, don't forget that now we have equity appreciation happening. And now that you have an income producing property, you also have a value that's increased by the cash flow. So all of these things are helping to improve and increase your equity. And now, once that property is in service, you also have the tax benefits. You have the ability to take depreciation. Like I said, one of my favorite expenses, because I don't actually have to take money out of my account, but I can write it off. And then there's all the other write-offs. And then if you do get involved in the management or participate in the activities, there are other things like mileage and meals and all sorts of other things that you will be able to write off. So if that doesn't light your wood on fire, if that doesn't light your fire, then your wood is wet. Over to you, Skip.
Well, I'm going to just talk about two simple things, and then I'm going to have to go because I am going to show two properties today, one to an owner-occupied buyer and one to a real estate investor looking at these properties. And, you know, everybody who's ever been in real estate, who's made money, has found an opportunity at the right time. There's good times and bad times to buy real estate, right, guys?
Always.
If you bought at the end of a cycle when properties were going down in value, but we're in a short term. Yes.
I'll only make one exception and I'll go back to the cash flow statement.
Yes.
It's never a bad time to buy positive cash flowing real estate. Even in a down market, the bonus is on the upside. I mean, think about even at anyone who had cash flowing property when the market crashed in 2008. If you just held on to it, even if it just broke even, today your equity would have at minimum doubled.
Yep. So I'm going to give you two simple formulas. You write a check, you buy a property for $200,000. And when you write that check after you pay all your expenses for that property, it's a rental. You pay all your expenses, you net a $10,000. So if you take the $10,000 and divide it by 200,000, that is called return on investment. That happens to be a 5% return on investment. Now think about this for a minute. What other options do you have with that $200,000? You could put it in the stock market, which never goes down, right? It only goes up. You could put it into the bank and get today, I think I have a couple $100,000 in the bank, and I'm getting a long-term CD rate of about 4.5%, which, by the way, I have to pay taxes on it. And the value of that dollar goes.
And what's inflation now, right? And PS, whatever the government says, double it.
Yeah, right. But I mean, so there are multiple ways, but in this particular investment, if you take that $200,000, buy the property, and you look at the income it generates, that's a 5% return. Now, most people who are real estate investors are smarter than that. They're not going to tie up that $200,000 in one property. They're going to put 20% down, and I'll give you a different example. On this $200,000 property, I call it, investors call it, return on cash. How much are you investing and how much is the return? So on the same $200,000 property, if you take 20%, that would be $40,000 that you're putting down on that property. And if that same property earns that same $10,000, your return on cash is based on the $40,000 investment, and now you have a 25% return on that cash that you've tied up in that investment. And you also have tax advantages like we've talked about. So the bottom line is, Eric, I love your statement. Positive cash flow is always important. And if you can get a better return on your cash than leaving it in an investment account or leaving it in a CD, then you're wise to buy investment real estate, especially in an environment where we expect property values to go up. You know, looking at this particular property, and then I have to leave, gentlemen. I told you about that earlier today. But it's only to help an investor and help a first-time home buyer. $162 a square foot. When you're buying real estate, one of the key ingredients to buying real estate is knowing the cost per square foot and the return on cash and the return on income. So today is a golden opportunity in not only Pensacola, but communities all over Florida where builders have overbuilt and are not able to move property. So that's it. I'm done.
All right. Well, good luck, Skip. And we're going to wrap this up. We've got a couple more pieces of the puzzle. Don't let the door hit you on the way out, as they say in Hollywood, but good luck on those sales.
Goodbye.
All right. So one thing that we would be remiss in not discussing are risks and the means by which we can mitigate or reduce those risks, because any good investment advice includes the upside and the potential downside. So with new construction, or as Eric talked about earlier, pre-construction, there's always the chance of a construction delay. In fact, the new construction I'm buying as my residence is supposed to close mid-November. I've already calculated into my mind it may take another month or more before that's completed. So I've built my strategy as a vagabond and a bon vivant in doing Airbnb rentals, and very strategically, I'm sitting in St. Augustine, Florida right now, enjoying this amazing city, by the way. So it's like I'm on a mini 90-day vacation, although because of my business that I'm in, this real estate business, I get to work remotely. So have laptop will travel. But I anticipated that. And then I'll be moving over to the West Coast after the season ends so that prices come down. And then whenever we close is great. But in this particular investment, we don't have to worry about construction delays. Why? The homes that we're talking about are already built. They're completed. That's why the developer is offering these amazing incentives to first-time home buyers and investors. So construction delays, cost overruns. We can scratch that one off this list, but very important when considering pre-construction. Vacancy assumptions. We already talked about that. Yes, there are potential risks. Eric, you talked about cash flow. It's hard to make a profit when there's nobody to rent a property. So you're coming out of pocket. And that's why when Skip mentioned there are 3 military bases, you've got an up and coming booming sector of employment, unemployment is low. Well, in that particular marketplace, that risk has been mitigated. It's reduced. There are many places around the country, to be sure, where prices are softening. There are more properties in inventory, and it can become a challenge. And by the way, we're talking about the builders having this inventory. They're feeling it a little bit themselves right now. And if you're their CFO and you're seeing the numbers coming down and paying closing costs, that's tightening your belt a little bit as the developer, but that's an opportunity for the investor. Again, we know we are going to get one house as an investor or more, but one house, put one tenant, one family in there, and we're golden. We're good to go. We don't have to worry about the macro terms that are going on in that local marketplace. Market softening. Once again, we talked about that. This is a smart investment. It's at the lower end of the spectrum. We're not hedging our bet on luxury real estate going up, but $1 million home that loses 10%, 20%, that's a big chunk of change. This market is very safe because of the metrics we've already talked about. And then how are these risks planned for? Well, by meeting with your local real estate professional, analyzing the very things that we talked about at the beginning of this video podcast, the things in the local marketplace that affect real estate values. So that's a smart move. And there, you really need your local real estate expert to help you. Even if you're in the real estate business, our good friend John is in San Antonio. I don't know anything about that marketplace. I would absolutely rely on his input on that market if I were looking to invest money into it rather than just guessing at it. So that takes care of the numbers. And again, these numbers will fluctuate a little bit. The opportunity is really here just for a couple of months. But with that being said, I think it's time for a call to action. Eric, back to you.
And that's really what it's all about. People sometimes say that knowledge is power. I say that knowledge is potential power, but it is knowledge plus action that is the real power. And that's where the results come from. So in today's program, we have talked about the main idea of buying new, okay, whether it's pre-construction, existing, or completing construction. Right now is a particularly interesting time because the numbers work. And as we start out by saying, it's a challenge when there's a market where there's more demand and a return required, and yet the inventory is scarce or few and far between, and the costs and so forth are rising. So, here we talked about something, and it was interesting as Skip was going through the numbers, talking about instead of putting $200,000 in a certificate of depreciation, that he could take that same thing, divided by that $50,000 into 4 properties, control over $1 million worth of real estate, and have a 10% return on the investor on the total investment, and a 20 to 25% return on cash. So, like I said, those are very exciting numbers to exist. But here's the thing. Everything that we talked about today is not theory. Everything that we talked about is what is actually demonstratable, provable, in writing. It's real. And the beautiful part is that it's replicable. In other words, you can do it over and over. You can do some in Pensacola, some in St. Augustine, some in Punta Gorda, or wherever else your local market is. So if you want to see the numbers for yourself, if you want to see property photos, visit our website, on YouTube. There'll be a link and there'll be information. If you're interested in learning how to do one of these kind of a workshops, imagine if you could put 10, 20, 30 or more audience on a virtual webinar, and for you to go through those numbers. I guarantee you that you will have people calling you, wanting to know more, wanting to see these properties. And if the numbers are correct, and what we gave you today are the facts, then you will have a never-ending list of buyers. And the beautiful thing about investors, and why I always chose to focus on investors, is that the average homeowner buys a home once every, 7 to 10 years. An investor could buy a home, multiple homes per year, or a home a year or every other year. So you have a much smaller client base that you have to address. And we have a do it for you component for that, how to develop and build that list of a loyal following of investors that will keep you busy for the next 5 years. So you don't need to do the webinars yourself. Leverage ours. Okay. We have already distilled the formula. We have figured out the framework, and our do it yourself or do it with you, done for you webinars will get you there. So text the word calculator to 561-861-2366, the word calculator, to get a free investment analysis calculator that you can plug in the numbers in your local market and watch this work. Contact us. We'll help guide you through all the blind spots and all the like Patrick, he addressed not just the great stuff, but also the risks and the things to be aware of. But the risk reward ratio in what we're talking about today far exceeds most other areas. So first of all, Skip, you already left. Thank you for your contribution to today's workshop. Patrick, you're still here. Thank you for bringing your insight and your views on this. I hope that you guys enjoyed it. Thanks so much for joining us on the 5-Year Career Podcast, which goes live every single week. We hope you enjoyed today's episode especially. And if you liked what you heard, don't forget to subscribe, rate us, leave a review. Your input and your feedback is invaluable, and it also helps us to decide what we're going to talk about next. Your feedback does mean the world to us. I say that sincerely. So on that note, Patrick, before we say our goodbyes, any parting comments?
No, it's just, you know what? Act now. Strike while the iron's hot, ladies and gentlemen. It's a business that sometimes seems like it takes forever to make money, but here's an opportunity to make it immediately.
Yeah, like the old TV commercial always used to end up by saying, act now while supplies last, because offers are subject to change without notice. So remember, don't just listen. Use this information to build your own 5-year career. Remember, join us on YouTube at 5-Year Career. That's the @ 5-Year Career spelled out. Like us, follow us. By the way, Patrick, do you want to put up the QR code?
I would be happy to, yes.
Our next webinar, if you want to come check it out. This is a free test drive. Go ahead and snap that QR code, take a picture of this, and register. There's no cost, no obligation, and you're going to get a little taste of how wonderful and automated this process is to fill your pipeline with, whether it be first-time home buyers, whether it be employee, like Patrick talks about, the vertical, go vertical, whether it be brand new investors, and more to come.
Adios.